We are expecting a rate rise. Our business editor Ross Greenwood is with me. And Ross, higher than expected inflation, the strong retail sales among the reasons most economists think there will be a hike today.
I can tell you, Kieran, that the odds of a rate rise today are significantly lower than 23 to 1. In fact, it's even money either way, according to the money markets. Effectively a 50% chance of a rate rise today. But if you talk to economists, it's an odds-on favourite that rates will rise. Effectively, 33 of 35 market economists that have been surveyed say that rates will rise when this decision does get handed down in just a minute or so's time. Now, the reason for that is because, as you point out, inflation has come in higher than expected. House prices are rising. You've got retail sales that have come in much stronger than anticipated. And all this leads to the suggestion that maybe the forecasts of inflation starting to ease off and moderate as our economy cools really is going to very much come down to a longer timetable than what the Reserve Bank has prescribed. Mind you, it is a fairly long tail to it because they're suggesting it'll be out until the back end of 2025 until inflation comes down to its prescribed between 2 and 3%. And so effectively they're trying to do that to try and hold on to as many jobs as they possibly can in the Australian economy. Now, ahead of this decision today, which will come out in the next few seconds, you've really got the stock market down by about 26 points. Well, watch the dollar. It's been rising on these anticipation, 64.84 US cents, and also money market interest rates, the short-term rates, 1-year bonds sitting just a little above 4.5%. So this decision is going to come down literally in the next 5 or 6 seconds. Let's just have a quick look and see exactly what the Reserve Bank has done. Here it comes down now fairly shortly. We shall see it. And what we can tell you as we get to that is that the rate decision is an increase in interest rates. The Reserve Bank has raised interest rates as expected by 0.25%. So the cash rate goes from 4.1 to 4.35%. Now, we'll get to some of the reasons as to why the Reserve Bank has made this decision now. And what we can basically start to tell you is that the decision from the Reserve Bank today, coming from Michelle Bullock, the Reserve Bank Governor, and of course pressure on the Reserve Bank because the Treasurer had certainly indicated earlier that he thought there was no real need for these rates to rise because he said inflation would be moderating. And effectively the Reserve Bank is saying, while further tightening of monetary policy is required to ensure inflation returns to target in a reasonable time frame, that'll depend upon data. But effectively what they're saying is that there's uncertainty about the international outlook and returning inflation to target within a reasonable time frame remains the board's priority. So just repeating, the Reserve Bank has increased interest rates by 0.25%. There is no surprise, no shock here. And so really now mortgage holders, those people with business loans are going to have to now find that extra money to really, if you like, make up for this increase in interest rates that the Reserve Bank has just handed down.